Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and I was looking at this economic and housing market outlook by Lawrence Yun. He's actually really good. Probably one of the best, I would say, presentations that I've seen in a very long time. And he ties together all this stuff very well, much like I would. I mean, he's viewing this from a very similar viewpoint as I do. So let's step through this presentation real quick. I'm gonna highlight some things that he's touched on, and we'll jump right into it here. You know what? Let's lose me. I can talk about this. So, so we got the economy, swiftest decline, then a fast recovery. Yeah, we all know that. This is GDP. Massive savings turns to spending. So personal income. GDP percent change from a year ago, lots of savings over here, and then not as much. Revenge travel spending at restaurants and lodging, nice, good move higher. The COVID dip. Worldwide comparisons of GDP growth rates, 2021, 5.5%, 5%. Lots of very strong growth in GDP. Global GDP growth rates, again, for forecasts. I'm just going to keep coming down here. U.S. economy is fully back, but not jobs. 95% of prior peak, need 8 million more jobs to reach pre-pandemic levels as we're coming on up. Monthly job additions and stimulus passage. You can see the large negative loss here and then kind of coming back. I'm going to keep coming down here. Job openings, all-time high for job openings. And I've seen this too. I was kind of looking at just jobs, and there's a bunch of job openings. This guy nails it with this chart here. Consumer price inflation crosses 2%. Who cares? Here's the 2% mark as the red line. We've been in this kind of 2-3% channel, and we're blowing past that like it's nothing. Consumer price inflation, everything is more expensive. A couple of things are a little bit cheaper, but things are going up quite a bit. Pipeline inflation pressure, producer prices on construction materials continues to go higher. This is March 2021. This was done in May 2021. They're talking about farm grain prices all going higher. The dollar, the king of currencies, recent weakening dollar adds to inflationary pressure. I totally agree with this. It has been coming down. We've come up a little bit recently, but I think the overall trend is going to be lower over time. Primary rent and owner's rent had been decelerating, but will pick up soon? Question mark. I think so, and I think it has. I'm going to skip that. Rental households collapsed, now are returning. We've got percent of realtors expecting rent strengthening in upcoming months. Existing home sales, seasonally adjusted annualized rate topping out. So this is existing home sales coming in here. We had this huge dip and then a big surge higher, and we're starting to stabilize again. And here it says new home sales are holding on at a higher level. You can see we were in 2018 about 600,000 units, and it's going up more towards 1 million units. Record low inventory, multiple offers, temptations to discrimination. We're coming on down for record low inventory. Record low inventory, record high membership. I'm not exactly sure what membership is. Coming on down, inventory, existing to new ratio. Are home builders no longer friends? So we're coming on down. Very, very low, below 4, the lowest I think it's ever been. Well, in this chart it is. Inventory by price buckets, massive percent changes in the lower home price values. Home sales by price buckets, lots of percent change from a year ago, over 1 million. These guys know what's going on. They definitely know what's going on. Medium days on market till ratified contract, way down, below 20. That's incredibly low. Absolutely. I mean, look at in 2011, it was 100 days. Now we're below 20. Weekly trends on new contracts and new listings coming way on up. Housing starts, single family, multifamily. The housing starts are increasing. We are going up. And I just looked recently, we were at 1,600. So we're up off this chart right now. Annual housing starts from 1960 in 1,000 units. This is kind of the red line of 1.5 million. And we were underbuilt in this scenario over here. So we're going to have to come up and overbuild for some period of time. We're going to have to probably do something like this. Future inventory, where? Most active single-family home construction in the past 12 months, Houston, Dallas, Phoenix, Austin. Biggest percent gain in single-family home construction. A lot of it in Texas. Less hurried decisions and frenzy by year-end and 2022. More supply, new home construction, winding down of mortgage forbearance, vaccination. We got less demand, higher home prices, higher mortgage rate. That's what he's got for supply versus demand. Mortgage rates are rising, 10-year Treasury rates rising, Fed funds rate holding. At the moment, monthly mortgage payment at prevalent price and interest rate, it is going on up. That was March 2021. Affordability scenarios, monthly mortgage payment, $1,257 at a mortgage rate of 3.5%. And a home price at $350,000. That's still really low, though. Office absorption, million square feet. Workers are slowly returning to the office. Skip through this. Economic forecast, GDP 2.3 minus 3.5 plus 4.5. And then the job gains and losses. Consumer price inflation, 2.7%. Housing market forecast. Revenue, home price, they're estimating a 7% gain in 2021. It's probably higher than that. Existing home sales, new. Just looking here. The wealth comparison. This is the wealth comparison between renter and homeowner. 2021, 297,000. Not exactly sure what this means. I don't know if this is the homeowner and the equity they have in their house versus renters. Or is this just the wealth that they have in total? Most worthless and most useful activity simultaneously. Which activity? Okay, and that's all he's got for that. But I wanted to touch on that. There's a lot of good information in that presentation in real estate. I think real estate it's still strong. The thesis is all still intact. I think it's still going to be inflationary. I think house prices may not go up as much as they did in this past year in terms of percent, but maybe. I don't know. I will continue to watch it. I'll continue to report on it. I like these. This guy's pretty good. I've seen a couple other presentations he's put together. He has all the right information, and it gives you a kind of an overall outlook on real estate and kind of overall gross domestic product type stuff. I got this from NARrealtor.com. So NAR, National Association Realtor. Yeah, National Association of Realtors. So that's where I got this information and presentation. I just wanted to run through it real quick with everybody. And my opinion is everything's still intact. Housing starts are still going up, which is good. And I think the real estate market's going to remain pretty robust for a while until inventory comes online. When is that going to happen? I'm not exactly sure. But we are very low inventories right now. And I don't think prices can go down with the inventory levels where they're at. You have to have homes come online and start to build an inventory. That days on the market have to come up for this real estate market to turn around and actually cool off. And that's just cooling off the rate of increase. I'm not talking about cooling off in terms of going down. That's just cooling off the rate of increase. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.